And that's brought down gold prices. It's brought down Bitcoin. Bitcoin's down what? $10,000 from where it was, from its high. Gold is hanging around there at, what is it? 2,591 bucks. It's still up, almost $600, well, a little less now, since the new year began. So it's a different wild card game going on. The euro's going down. The dollar's staying strong because of strong interest rates. So that's what we see happening. He's going to lower them. When he lowers them, gold will go back up again. Gold's going to be weakened as long as they keep staying on the high interest rate track they're on.
In today's news recap, gold holding $2,600 ahead of shortened holiday trading week. Despite ending the week in negative territory, the gold market managed to hold critical support at around $2,600 an ounce, even after the Federal Reserve signaled it would slow the pace of rate cuts in 2025. Gold struggled during the last full trading week of 2025 as investors prepared for the Federal Reserve to announce a hawkish rate cut. As expected, the central bank cut the Fed funds rate by 25 basis points. However, updated economic projections revealed that forecasts for interest rates, also known as the dot plot, indicated only 2 rate cuts next year, putting rates at 4%. In September, the Federal Reserve had forecasted 4 rate cuts for the new year. Analysts note that gold could still face challenges in this environment during the shortened holiday trading season. Commodity analysts at TD Securities said in a note Thursday that the path of least resistance for gold could be lower in the near term. While we do not expect a rout, given uncertainties surrounding Fed policy, should inflation continue to be higher than expected and the economy start to slow at the same time, new geopolitical risks, and a renewed round of central bank buying, somewhat lower prices are still likely in the near term. It would not be surprising to see prices drift down to the November lows of $2,537 per ounce, the analysts said. However, other analysts see gold caught in a tug of war between the Federal Reserve's monetary policy and geopolitical uncertainty. Gold managed to hold critical support Friday after the U.S. Congress was unable to pass a spending bill before the holidays. The government is once again on the brink of a partial shutdown that will affect everything from border enforcement to national parks and furlough up to 2 million employees. Now we'll show you the best clips of the latest interview, but first hit the like button, smash the subscribe button, and check the pinned comment because we're offering an exclusive discount on NordVPN, an essential tool for gold and silver stackers who value privacy and security. Make sure you safeguard your online activity and protect yourself from prying eyes. And if you want to learn how to stack and how you can benefit from the gold-silver ratio to make savvy investment decisions, check our guide at goldsilverstacks.com. Enjoy the episode.
Over 1,000 points. The Dow down 2.58%. And they were on the longest losing streak since 1974. I remember those days. Boy, inflation was skyrocketing back then. Woo. The S&P yesterday was down almost 3%. The NASDAQ was down 3.56%. So today they were up and then they just went up just a little bit on the Dow. The Dow was up how much over here? 15.37 points, which is nothing. It's flat. The S&P was down 0.9 and the NASDAQ 0.10. Actually, the S&P was down 0.09, so hardly down, but flat. So the reason why is that yesterday the Fed had met. They finished their meeting, and they only lowered interest rates 25 basis points, which that was the guess that they were going to do. But they said that looks like next year they're going to only lower them 2 more times, and the street was betting 4 more times. And that's brought down gold prices. It's brought down Bitcoin. Bitcoin's down what? $10,000 from where it was, from its high. Gold is hanging around there at, what is it? 2,591 bucks. It's still up, almost $600, well, a little less now, since the new year began. So it's a different wild card game going on. And the European stocks, after the Feds announced what they were going to do, they had their worst session for 5 weeks. And the Bank of England is holding interest rates. We're going to get to that in a bit. And the Asian markets, they tumbled too. And the Bank of Japan is keeping their rates on hold. So we have, it's in your Trends Journal. The new edition was just out on Tuesday. And we're writing about how the slowdown is going on around the world. It's in our economic update. And it's serious. So now with them keeping rates where they are, the ECB, European Central Bank, they just lowered them 25 basis points. They were hinting they're going to do it more. But here's an article from the Financial Times. Rout of Brazilian real will worsen. So it's one after another. Then you look at what's going on with the loonie up in Canada, and you got the Looney Tunes. Oh, that little arrogant boy, that little daddy's boy. Oh, was it Fidel Castro? No, I think it was Pierre Trudeau. Yeah, Trudeau. Oh, he's in trouble now. His ratings are in the toilet.
In today's episode, we cover the latest market movements, gold's performance, and the shifting global economic landscape. Markets slid as inflation continues to weigh heavily on the economy. The U.S. Producer Price Index rose by 0.4% in November, catching Wall Street off guard and sparking fresh concerns. The Nasdaq fell. The Dow dropped over 230 points, and the S&P also closed in the red. Treasury yields climbed, signaling higher borrowing costs on the horizon, including for mortgages. With the Federal Reserve expected to cut interest rates by 1/4 point next week, it's clear central banks worldwide are moving in sync, just like the ECB and Canada's recent rate cuts. Gerald Celente would say, it's one big club, and they're all playing the same game. Gold took a breather, dipping $35 to $2,683 per ounce, but holding strong gains for the year, up $641 since January. Bitcoin remains above $100,000, showing crypto's growing influence in financial markets. But as Celente often reminds us, if it wasn't for Bitcoin, all that money would have gone into gold. With rate cuts expected to weaken the dollar further, analysts see gold maintaining its upward trajectory as inflation and economic uncertainty persist. Commodities told a mixed story. Brent crude dropped to $73 a barrel as weaker demand overshadowed OPEC plus production cuts. Industrial commodities face similar struggles, reflecting a global slowdown in manufacturing. Still, the coordinated efforts of central banks to stimulate growth offer hope for some stability ahead. As Celente says, when all else fails, they'll print more money. But the real question is how long they can keep it up before inflation spirals further. For now, markets are navigating a delicate recovery with turbulence expected to continue. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button and check our exclusive deals with NordVPN, the fastest and most reliable VPN in the market to keep your data private. Enjoy the episode.
They destroyed the global economy. Nobody's talking about the damage that they've done. So the loonies going down, one currency after another. The euro's going down, the dollar's staying strong because of strong interest rates. But what's that going to do to the economy? So our guess, I would say forecast. I don't call it a guess. Trump is going to do everything he can to lower interest rates when he takes office. And I say that because by their deeds you shall know them. And he did that back when he was president in 2018, December. Yep. What did he do? It was the worst December for the Dow since the Great Recession, 1931. He forced the Feds to lower interest rates, and they did in January. Oh, and that created the repo crisis. Well, we won't talk about that. So that's what we see happening. He's going to lower them. When he lowers them, gold will go back up again. Gold's going to be weakened as long as they keep staying on the high interest rate track they're on. UK borrowing costs climb as stagflation fears hit gilt. That's a currency. Worries over the stagnating UK economy and accelerating inflation are unnerving investors, pushing borrowing costs to their highest premium over German debt yields since 1990. This is from the Financial Times. Again, one currency after another is getting hit, and it's not going to be stagflation. It's going to be dragflation. Now, that's what they used to say when they were gay. They were drags, not anymore. They're gay. Gay should be happy, not happy anymore. Yeah, but anyway. So it's dragflation. The economy is going to drag down. Inflation's going up. And this is the bullshit going on. Again, stage is set for flurry of deal making across media. This is from the Toilet Paper Record. The people in charge of the world's biggest media companies are setting a stage for a flurry of deal making. Isn't that nice? Deal making. The bigs get bigger as the rest of us get poorer. Again, media companies, we need your support. We're giving you what no media is giving you. Nobody, anywhere, any place. So subscribe to the Trends Journal for the grand total of $2.56 a week, or read the Wall Street Journal for $5 a day. No, the Toilet Paper Record, the New York Times, $4 a day. Hey, it's Christmas time, and we're for peace on earth. I launched Occupy Peace over a decade ago. Nobody's singing about peace on earth anymore, and all these religions, they all got lockjaw. Oh, yeah. Anyway, this is an article in the Wall Street Journal. Housing crisis goes global. That's right. The rich are getting richer. Everybody else is getting poorer. And the big companies are buying up everything. Now they're buying, build to rent houses. Before they were just stealing the houses of people foreclosure. Now they're and buying up new, homes that were going on the market. Now they're building them to rent. So that's it. Here. Another shows you the fascism. You ready? GM plans overhaul of iconic towers in Detroit. General Motors and billionaire developer Daniel Gilbert are planning to overhaul downtown Detroit's iconic office complex. The venture's $1.6 billion plan would demolish two blah, 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 blah. And the proposal calls for $350 million in public subsidies. Isn't that a nice word? Public subsidies.
What do you think about Gerald Celente's bullish stance on gold? Do you agree that it remains one of the top trends heading into 2025 despite the recent sell-off? Share your thoughts in the comments below. We'd love to hear your perspective. And don't forget to like, subscribe, and hit the notification bell to stay updated on all things gold, silver, and market trends. Thanks for watching, and we'll see you in the next video.